Hello, everybody. Happy Friday. Thank you all for joining. It's been a remarkable 24 hours. We saw some big moves in a number of different assets. We saw some big moves. One was MicroStrategy, over a 30-point swing in 24 hours. Bitcoin, 1,500 points. There's a lot of good stuff out there under the covers, despite the fact the last 8 months have been absolutely incredible. But it looks like the markets may have a little bit more legs. And so much for that sell in May, go away. That simply didn't work at all. So let's jump in. This is 21 charts. I'm going to look at 21 charts that cover a whole bunch of stuff. We're going to look at investor sentiment. Are the bulls awakening? Improving some Bitcoin on-chain stuff too, as we smash 26.5. Key level, as we all know if you listen to this channel. And historical data suggests we're in good shape for the next 300 days. Also, we'll look at where we are in the actual cycle. We'll talk a bit about more scarcity, absorption rates, long-term holder resilience, declining Bitcoin on exchanges, a little bit of macro, a little bit of Tesla news, and so much more. So thank you all for being here. Thank you to the mods in chat. Kiwi Robin, good to see you. K8 and TND Tesla. And of course, none of this is ever financial advice, it's edutainment. And if you want to amplify your intelligence, you know what to do. Mr. Hammer, appreciate you too. So let's go. This is about data-driven decisions. And you know I believe a picture tells 1,000 words. And I handpicked beautiful 21 images over the last 24 hours to do this. So let's go. Let's talk about where we are first. Bitcoin issuance to 0 or close to it. This is a key piece of the puzzle. And again, I can't get enough of these images because it is just so pure and so beautiful. And people are still negative. But when you look at this simple little chart here, going from 2010 to 2014 to 2018 to 2022 and on and on and on all the way to 2034, you can see the supply schedule and increasing scarcity of Bitcoin via halvings. This mechanism is just amazing. It's written in stone in the protocol. Nobody can change it. And there is no other coin as well that can deliver this. The annual issuance keeps shrinking to 0. We're going to soon be at 99% issuance, and there will only ever be, as I say, 14 million Bitcoin. Although this is called 21 charts after 21 million Bitcoin. But here we are. The halving is coming up and Bitcoin is becoming more scarce. But we are not the only ones here to notice that. So where are we in the cycle? So I took this great little chart. And again, thank you, Kiwi. Good to see you, buddy. Only Bitcoin offers this special characteristic. Now, everybody knows the halving is coming up. This chart shows you on a timeline where the 2024 halving is, and typically the movement of the snake-like creature that is Bitcoin and any chart of where we are. So we did hit the bottom of that 15.5. Right now we are at the green dot. You are here and we're going towards that halving. Per this chart and per my estimations, I think Bitcoin could hit between $35,000 and $42,000 by April 14th, 2024. It could also be 3 or 4 days earlier than that. We're not sure yet. And then after that, the world wakes up to the fact that, the demand is actually higher because of the halving and the supply was just cut in half. So the price goes up. And again, there is no next Bitcoin and there's no other tool like this. Motor89, I appreciate you too. So the question is, how high do we go for the new all-time high? Well, that's up in the air right now, but it'll definitely be a new all-time high, and it'll definitely happen within 6 months of the halving. So fast forward, what's that, 480 days from now, we'll see some good things. In the meantime, keep your seatbelt on because it'll be volatile. Now, there was a lot of talk. This is from Swissblock, who are normally very bullish, but they shared this little chart here. You guys are all too kind today. Happy Friday, everybody. But Bitcoin's price is at this critical juncture. We had a little bit of nervousness. I did have a limit order at my usual level. My only regret now is not buying more at the 25K mark. I think it was my first purchase for Bitcoin this year. But again, it was a significant level that we tested and we bounced off nicely. It did break it a little bit. There was talk of maybe going down to 24.2, But no, I think the little catalyst that was the BlackRock ETF news, potentially, really brought everybody out of their shells and into Bitcoin. And we must not forget, again, this critical level here is the difference between bear market and bull market. The 200-week moving average is so important, and we're back there right now. So things are looking pretty good. And it looks like the bulls won this little bout as we go forward. Now let's look at some other stuff that's happening. It's a brilliant chart from Glassnode. This chart shows you the shrimp to fish monthly absorption rates. And this is a function of how much these cohorts are actually absorbing of the newly created supply by miners in a percentage term. So a reminder, everybody, if fish, let me get this right. Fish are people who own, shrimp are less than one, I'm rusty here. Shrimp are less than 1 Bitcoin. Crabs are 1 to 10, octopus 10 to 50, 50 to 100 are fish. And above 100, I think, are sharks. 99% are sure there. I'm right there. But the point here is, if you look at the shrimp, crabs, and fish, basically all the wallets less than 100 Bitcoin, they are adding to the balance at the rate of 248% of the amount of freshly minted Bitcoin by miners. So this cohort is stacking hard again. Maybe front running. Obviously, you can see on the next chart, this is fish to shark, the absorption rate. This is 38%, not as high, but look very carefully. See the huge big fin in the middle? Can't make this up. Shark fin is a huge spike. They spent a lot of time buying at the bottom in November. They went in hard, okay, because they knew, all right, Bitcoin's at 15,500. That's a crazy good deal. And they bought a ton of Bitcoin at this amount. So again, the halving is 300 days away approximately, maybe a little less. And people are still shopping for Bitcoin. And what does that mean? So let's look at a little bit of bullish sentiment from a bull flag. I heard people talking about bear flags today and bull flags and all sorts of flags. And I think all of this is a bit funny, really. But my job is to share what other people think. This is from Titan of Crypto. And I think it's a very safe bet for him to say there's a bull flag where we are right now, because we know going up to year end, i.e. year end 2023, early 2024, the market will go up. So it's a pretty safe prediction. But I thought it was interesting to see the way he laid it out here with the bear flag to remind people what flags look like, and the bull flag and the target. The target, by the way, per this chart is 49,000 by Christmas of this year. That would be crazy for it to happen, but is it even possible? Well, there's some more stuff going on that we all need to really be aware of. So first of all, let's look at who is in a mood to sell. And the answer is nobody. This is a chart of the long-term holders, and they are showing very strong resilience in the face of market volatility and scariness from the SEC and regulatory pressure. Long-term holders don't care. So you can see per this chart, the pink line at the top is supply last active 1+ years ago. Green is 3+ years. Orange, 2+ years. And blue is 5+ years. And again, it keeps on getting hodled more and more. And as of June 13th, the percentage of Bitcoin supply held for longer than a year has reached an all-time high of just over 68%, nearly 69%. So basically, 30% has not moved in over a year. And this indicates that investors are not selling their Bitcoin, even though for some of them it could be trading at a loss, considering if they bought it close to 30K a few weeks ago. In addition, this is kind of the one we've been talking about and looking at for a long time. Obviously, with all the news about Binance and Coinbase, people are really, really going more into self-custody. And Bitcoin supply and exchanges reached the lowest level since Feb 2018. That's kind of insane. Now, if you look at this chart here, it talks about the Bitcoin supply and exchanges has been declining since November 2021. That was the last all-time high. And this is a sign that investors are becoming very much more hodlish. They want to hold their crypto off of exchanges, Bitcoin especially. And the total amount now, depending on who you talk to. So sentiment say that 16% was on exchanges back in 2020 during the Black Thursday. Today, it's 6.4% of Bitcoin on exchanges, even after the SEC suits and everything else. But according to Glassnode data that I'm looking at, it went from 2.4 million Bitcoin on exchanges down to 2 million flat as of June 14th. So nearly 500,000 Bitcoin have left exchanges. And there are some people that just won't come off the exchanges for, obviously they don't trust themselves hodling their own coins. But this trend is crazy. Now, if BlackRock takes a fraction of one of their 10 trillion in assets under management and allocates to Bitcoin, they're probably going to have to buy it somewhere else. Like get on the phone to Coinbase and say, hey, can you hook me up with a couple of $1 billion worth of Bitcoin? Because we need to allocate. And then things will be crazy. So we'll see. And as I said, I think on Twitter or yesterday, if any firm can get SEC approval for a spot ETF, BlackRock can, because it got their fingers and everything in the government here in the US. Also, there is a little bit of a weird angle to this. This is Bitcoin sentiment. It is the lowest since C19 March 2020. C19 was the days of the fear and lockdown and that huge spike downwards. That's when I ran into a burning building. I bought my first Ethereum at that time. But here, what's crazy about this is the price does not follow the herd. Yes, the sentiment is down. But can you imagine, ladies and gentlemen, what will happen if the sentiment returns and people go bullish? Like Bitcoin's going up with this crappy sentiment. What happens if it turns? So anyway, just more data points. Let's look at who is stacking as well from an altcoin perspective. Ton of fear, a ton of potential sell pressure as exchanges continue to delist altcoins, therefore allocate accordingly. But I thought this was very interesting. Big thank you to Sanjay for sharing. This is the net stacking flow from stakingrewards.com over the last 7 days. And a couple of things. You can see that there's heavy stacking happening on ETH, Cardano, Avalanche, Sui, Matic, Cosmos, GMX, and Solana. But there is big dumpage on Binance, Stacks, Tron, Hedera, Algorand, Phantom, Tezos, and Elrond. So it's interesting to see, despite the FUD against the names like Matic and Solana and Cardano, people don't care. They continue to stake their coins. It's like, yeah, whatever. SEC, who cares? And that is probably the right attitude to have. Yes, there could be some more sell pressure. Yes, Solana could go from, say, $15.50 down to 12 or 10. But the odds of it going higher are higher than the odds of it going lower, considering how beaten down it already is. And many top experts believe the capitulation actually happened when this FUD came up. But again, there could be a lot of sell pressure coming. But how big it is will remain to be seen. So let's talk about a new model we have. We are now doing more data around fully diluted market cap. This is from the IA engine. And this is the fully diluted market cap of top chains divided by daily transactions. And you can see here on the top side, obviously, Polkadot is probably the most expensive in terms of fully diluted market cap based on everything else. Sui is the second most expensive. Then you have Ethereum third, Cardano fourth, and Stacks fifth most expensive, i.e. that is, sometimes they charge, for example, each transaction is near $1 million for Polkadot based on the amount of transactions that the chain runs. And then on the other side of the coin, the cheapest is Solana, followed by Tron, then by Flow, and then Matic as we go forward. So again, just another perspective of data that we're sharing with you all to really identify which chains are relatively cheap based on transactions versus others. And fully diluted is very important to look at too, because if you look at the circulating market cap today for some of the newer chains like Sui, the number doesn't look that bad, but fully diluted, it's nightmarish. So let's talk about risk on versus risk off and where we are in the market today. So this is a great chart from Zero Hedge. And the risk on, risk off indicator is a measure of the market sentiment that indicates whether investors are willing to take on more risk or becoming more risk averse. And when the indicator is high, it means that investors are willing to take on more risk. When the indicator is low, it means investors are becoming risk averse. What's crazy about this, we are now at the highest level in a year. And all the experts on Wall Street and within JP Morgan who've been promising us hurricanes and storms since S&P was at 3,500, and everybody buying all the put options in the S&P 500 have all lost their butts. It's been a very rough period for them. But now, what's amazing about this is after all that negative sentiment from 3,500 up to nearly 4,500 in the S&P 500, they're flipping to risk on. It's like they've given up the ghost of bearishness and now they're flipping. And this is what happens. A large part of it is the pause. Another big part of it is the money printing that's coming and the liquidity that's coming too. Again, the market looks forward, not to where we are today. In addition, let's look at some Tesla news. These are Tesla sales in EU. We don't have this data month by month in the US, but in Europe, it is bonkers. So what's stunning about this chart from Polili on Twitter, who I subscribe to, he's really cool, but without, and this data also doesn't include May sales from Germany and the UK and a couple of other smaller countries. But even without those huge countries, Germany, UK, I think are the two biggest car markets in Europe, there's still a 104% increase in Tesla sales so far, year to date, based on previous years. Hey, Bill, that is just staggering growth. And there's not even complete. It's going to be bonkers. That's why I'm very bullish for Q2 numbers. And I think the market sees that too as well. So we could get a very good result from Tesla in calculate about 26 days, I think. Let's talk about their insurmountable lead. These are Tesla gas stations, not all of them, just the destination chargers, not all the superchargers across North America. And it's pretty stunning to think that a little car company, as people call it, has so many gas stations. What's also stunning about this data is only something like 0.2% of them are having problems, i.e. they're not online. But Tesla can track every single one. How they've been used, how they work, are they vacant or not, or anything else. And it's just one of the many things that the world is waking up to realize Tesla have this and they can monitor it like that. It's insurmountable lead, not only in their gas station business, but every other thing that they do. That's why it's an exciting company. Also, BEV Europe, it's not a beverage, battery electric vehicle Europe, will smash, I believe, 20% of total car sales in 2023, looking at these numbers. So focus in on the blue bar in Q1. It was running at around 13%. Back in Q4, last year, 2022, it was up around 18%. I think this year they will definitely smash, especially considering the growth rates. Absolutely smash the 20% threshold across Europe sometime in Q3 2023. And people think, oh, who cares? No, it's a really big deal. ICE is on the cusp of spinning out of the business. We are on the early stages of the S curve where things will go vertical, and the opposite of that will be ICE will disappear. And it's fun to watch. In addition, speaking of ESG scores, as Elon Musk says, ESG is the devil. These are the top kind of players, just some perspective of the top S&P 500 for their ESG scores. And you can see here, BAT, which is British American Tobacco, Philip Morris, and Imperial Brands, they're all cigarette companies. And we know what they do to people's lungs, and they cause people to not do well. But they rank more than 2 times better than Tesla. So again, government data, ESG scores, all of this is just garbage. Anyway, let's talk more about bullish investor sentiment. This is from Fidelity, Jury and Trimmer. And investor sentiment here appears to be improving as the headline index gains 20%. That's the S&P 500. And retail favorites regain popularity. There was also a study from the American Association of Individual Investors, and it shows an increase in bullish sentiment. So people actually, what's bizarre about this is the sentiment. That's why I don't follow sentiment. I share it, but I don't follow it, because by the time the sentiment turns, it's too late. Market's already gone up over 20%. And now people are turning bullish because they've seen the results. But you got to get in early before the sentiment turns. That's always the key. That's a big lesson. The reason I share this stuff. It's also caution not to overstate the significance of this 20% increase as a signal, many believe, a new bull market. Now, the broader market participation and the 50% hurdle are now considered more important indicators. And there was a retracement exceeding 60%, suggesting a new bull market. And currently, the S&P 500 cap-weighted index has retraced 63% of its decline, while the equal-weighted index has only retraced 39%. And the forward PE ratio has retraced, I think, 51% from this chart. And market breadth and the impact of the Treasury refilling its TGA coffers, remember that, $4 trillion is coming, are seen as key factors to confirm a bullish narrative. There's been a lot of talk, I covered it many times, that people are afraid that, once the Fed issues Treasury, it's going to suck the money out of the market. But there's so much money in the market, it's going to be fine. And again, the markets look forward. This is all playing into the whole bullish sentiment that many believe the new bull market's on. I thought it happened at 3,500. But anyway, let's look at some more data. It's not all perfect out there. The fear of a US banking crisis has faded from market sentiment. But if you look at this, there's a steady low drumbeat of distress among many banks. This is the money lent out under the Fed's emergency BTFO or BTFD plan or whatever it's called. And you can see the facility rose for a sixth straight week, remaining above $100 billion a week. So crazy amount of money is still being borrowed by this facility, which is de facto quantitative easing as well. More liquidity being pumped in, robbing Peter to pay Paul, but it's not publicly disclosed as such. But this shows that the banks are still in hot water, and we've yet to see the commercial real estate crisis hit. Regional banks own 70% of the mortgages on commercial real estate that are rolling in. Speaking of interest rates, the ECB is lagging the US and the UK rates. Although the ECB, I think they raised by 1/4 point this week. That's the highest level in 22 years, believe it or not. DSOS, thank you. This decision came in as the ECB warned that inflation was far from vanquished and will likely increase rates again in July. So a lot of that hawkish talk out there. But, it's clear that Germany is in a recession and the ECB is still raising rates. What are they thinking? Is it just all jawboning, or are they trying to smash everything into a wall? I don't know. But you can see here, the pink line is the US effective funds rate, which is tailing off. They hit that pause button. ECB deposit rate 3.5%, and the UK bank rate is below, but between them both. So the question is, what are they going to do? Well, there is still far higher inflation. In fact, the inflation in the UK is still very sticky, very high. Part of that could be because of Brexit. Not sure exactly, but that's my gut theory. ECB is not perfect, but spending is smashed. First, we warned a few months ago that Swedish retail sales were down to nothing. Now, Germany and... wrong slide. This should be out of sequence. This shows retail sales in the United States. Again, US retail sales fell 3.5% year over year, the 7th consecutive year-over-year decline. And that's the longest down streak since 2009. And this is nominal. When you look at nominal sales, they did increase by 0.7% year over year versus historical 4.8%. But the point is, all the signs are there that the economy is shrinking up. It's in Sweden, it's in Germany, it's in the US, etc. And final note, this is a cool little chart to show you. A lot of people ask, why are mortgage rates tied to the 10-year Treasury in the US, and probably similar around the world as well. And this is an R-squared chart. I thought it was interesting to look at, and how the R-squared is 0.99. It is completely correlated to the 10-year Treasury, and that is stunning to see. So if you ever have a question, where are mortgage rates going to go? What are they going to be priced at when you're planning your house buy or anything else in the future, or a refinance? Just look to the forward chart on the 10-year Treasury. That'll tell you where mortgage rates are going to go. So with that, everybody, that was 21 charts. And thank you all for being here. Happy Friday. Have a good time, everybody out there. Thank you all for being here. Anderson WQ, Robin, T&D Tesla, Jeff Heimer, and Cat with a K, and Dr. Sauce, D-Sauce. My eyes shot. I can't see very well anymore. But thank you all. I'll see you all tomorrow for what happened this week. Okay. Good night, everybody.